Hey everybody, welcome back to the Thinking Crypto channel. I hope you're doing well. We're seeing a breakout upwards in the crypto market. There's green across the board. We have Cardano hitting new all-time highs, very bullish. But I've got big news for you guys. Wells Fargo is launching a Bitcoin fund. All the banks are jumping in. It comes as no surprise. BlackRock is investing in Bitcoin mining companies. This is a big vote of confidence, guys. BlackRock is the wealthiest asset manager in the world, and they're investing in mining companies. Think about that. We also have Coinbase. They're about to put $500 million of crypto on their balance sheet. Huge adoption news. We have Jay Clayton crawling out from under his rock, and he's now going to go work for Fireblocks, a crypto custody firm. You can't make this stuff up. We're going to talk about that, the SEC Ripple lawsuit, of course, and many other items. Before we get into it, please go ahead and hit the thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel and it doesn't cost you anything. Guys, if you haven't seen my interview with Didi Tahutu, who is of course part of the Bitcoin family, be sure to check it out. I uploaded it yesterday. It's a great interview. He's a great guy. You'll learn a lot about how he's living off of Bitcoin and crypto. Very, very interesting and intriguing news there. So be sure to check out that interview. This video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite crypto. You don't have to pay high fees. OKCoin charges low fees compared to other exchanges in the market. You can also stake your crypto and keep 100% of your rewards. You don't have to pay any fees. So that's pretty cool. You can stake Tezos, Cardano, a variety of other cryptos. So be sure to check it out. Sign up with OKCoin, link in the description. Also, be sure to sign up for my free weekly newsletter, All Crypto Insights and Knowledge. So look at the market here, guys. Bitcoin over $47,000, Ethereum over $3,200. Look at Cardano, $2.42, up near 30% from a 7-day perspective, looking strong. XRP is doing well also at $1.22, up near 25% from a 7-day perspective. So what's going on? Well, as we've been talking about, guys, and by the way, the bears, those who are trying to short, are in life support right now. Look at the chart here, the Bitcoin weekly chart. And we're using Bitcoin as the measuring stick because all coins follow Bitcoin's move. And you guys remember I charted this out just, what was it, like a few videos ago or even last week? We're going to keep going up. We have another bull run cycle left in this bull market. It's not going to be a straight line up. You're going to have corrections and dip along the way. But I do believe Bitcoin is going to hit 6 figures and higher, and all coins are going to follow that. And we're going to see new all-time highs across the board. So have that macro level outlook. It's nice to see the short-term gains, but don't be surprised, once again, if we maybe touch 50,000 and then correct back down, right? But that doesn't mean we're going all the way down or we're entering into a bear market. We're just building support levels on the way up. Let's take a look at Plan B's stock to flow model here. And he tweeted the following: why I prefer the stock to flow model. Tells you when the price increases after halvings, more robust parameters A and B, time not an input variable, stock to flow model X in not a time series, interpolation possible, usable with other assets. So I think many of you who know the origins of the stock to flow model, it uses a lot of the models that are related to gold, of supply and demand. And we see it here with Bitcoin over time, the halvings and the supply shock and the supply and demand economics playing out. And you can see we're still on our way up. We haven't hit the full peak yet. And we're going to have a double peak like we did in 2013. Anyway, guys, moving forward, the big news: Wells Fargo launches passive Bitcoin fund for wealthy clients. JP Morgan also registered its passive Bitcoin fund with US regulators Thursday. Remember when they were trying to ban this and stop people from investing? Those of you who've been here, who've been in the market since 2016 or 2017, even in 2018, they tried to stop people from doing this. Now they're all in. I think they've been accumulating for years. They've just been putting out the narrative that it's a scam, it's a fraud, it's a fad. Don't invest in it. Now they're setting up shop, guys. So Wells Fargo on Thursday registered a private Bitcoin fund with US regulators, becoming the latest mega bank with an indirect crypto investment vehicle for its wealthiest clients. A source familiar with the matter told Coindesk the new fund is passive, a break from earlier reports that Wells Fargo would pitch wealthy investors with an actively managed offering. NYDIG. Remember what I said weeks ago, guys? Keep an eye on this name. They are part of Wall Street and they're working with a lot of big players. So NYDIG and FS Investments are partnering with Wells Fargo on the offering, according to regulatory documents. The pair have worked together on Bitcoin funds before. Wells Fargo gets a cut of sales through two subsidiaries. The new fund, FSNYDIG Bitcoin Fund 1 LP, did not have any sales as of Thursday. JP Morgan's passive Bitcoin fund was also filed with the SEC Commission on Thursday. So it's official. It's filed with the SEC. They're going to kind of crawl, walk, and run here. I'm sure they're going to start off with these passive funds, and I think a lot of them are waiting for Bitcoin ETFs. They would love to get their own Bitcoin ETF, but it starts with Bitcoin, and then they're going to go to Ethereum and the other cryptos in the market. We've seen this with many other funds, right? Bullish news, guys. All the banks are jumping in. We are on the side of smart money. We're here early. We're still early. There's still a ways to go in the adoption curve, and we haven't seen the massive FOMO from the mainstream as yet, like we saw in 2017 at the December 2017 tip. Now, as the market grows, that's going to get more intense, right? You're going to see loads more of FOMO, guys. So this is why dollar cost averaging is smart, buying the dips and hodling and being patient. That's not financial advice, just letting you know what I'm doing. Check this out. The world's largest asset manager has taken a stake in Bitcoin mining. BlackRock allocated over $382 million to shares of Marathon Digital Holdings and Riot blockchain. Guys, this is the world's largest asset manager. And the fact that they're investing in these Bitcoin mining companies show they have faith that these companies are going to make money and they're going to earn a return on their investment. Now, these mining companies don't earn as much money or make huge profits unless the price goes up. Get it? Right? You got to put those two things together here, put your thinking cap on. And this is a vote of confidence. And we know Larry Fink, who's BlackRock CEO for years, kind of dodged Bitcoin, kind of got nervous when he was asked questions about it. Now they're all in. We saw them go on CNBC, talk about it, and they're investing in the mining companies. I think that is right there, a vote of confidence. And Marathon Digital Holdings is one of the largest Bitcoin mining companies in North America. Remember, 2 months ago, I interviewed their CEO, Fred Thiel, great guy. We talk about the Bitcoin mining boom in the United States. And like I said, the United States government is not stopping this. We see governors and mayors are inviting people to come in their states to mine Bitcoin. This is a new industry. They're going to tax it. Jobs, revenue is going to come from it. And it's just one segment of the crypto market. Obviously, there's other cryptos, other use cases, but it's all here to stay, regardless of what, these clowns like Senator Warren and whoever else say. It doesn't matter what they say. It matters what they do. And they're allowing Bitcoin mining, guys. So this is bullish news. Now, check this out. An ex-Goldman Sachs trader has formed a new hedge fund to trade Bitcoin. You don't say. Iceberg Capital will aim to capture the extreme upside of an emerging asset class. Every one of these hedge funds and investment firms are getting in. All of Wall Street, all the banks, all the stock exchanges. There's still more to go, but we've seen the biggest of the biggest already capitulate. Paul Tudor Jones, Ray Dalio, Bill Miller, Stanley Druckenmiller, they're all here. Fidelity, Goldman Sachs, Morgan Stanley, then the list goes on and on, guys. Bullish times are ahead. Now, I've been talking about it for years. Those of you who've been subscribers to my channel, going back to 2017, where I said mass marketing is coming for crypto. And this is what's going to help usher in a lot of new investors and adoption. Check this out. Those of you who are basketball and NBA fans, Cade Cunningham, the first overall NBA draft pick, has partnered with BlockFi. the lending company. He will receive 100% of his signing bonus in Bitcoin. Wow, guys. And look at the video he put out today. And with BlockFi, Tom Brady did something like this with FTX exchange. Remember, we covered that where he threw a football to the moon and Bitcoins fell out of it. Kind of cheesy. But the point is, these people have millions of followers. They have a strong personal brand, of course, as athletes. And now you see them being positioned as spokespersons for crypto companies. Why do you think these companies are doing that, guys? They're trying to appeal to the mainstream. This is why I say count yourself lucky. We're here early, especially if you were here in the bear market, scooping up the dips, right? Because new all-time high prices are coming and these people are going to be FOMOing in. Now, there is a dumb money crowd, unfortunately. That's how it is, every market. But you and I are on the smart money side, guys, and we are still very early. Now, check this out. Bloomberg and Galaxy team up on decentralized finance index. So Mike Novogratz's Galaxy Digital has teamed up once again with data financial information giant Bloomberg to launch a new crypto index tied to decentralized finance, or DeFi. This is bullish, guys. I mean, Bloomberg, right? Mike Novogratz, obviously, we've talked a lot about him on the channel. He's a billionaire, ex-Wall Streeter, very successful, has Galaxy Digital, and the fact that they're partnering with Bloomberg to do this is huge. Let me give you some more details. The new index revealed Thursday will track 9 DeFi tokens to start and will also serve as the basis for a new passively managed fund by Galaxy. In 2018, Bloomberg and Galaxy launched the Bloomberg Crypto Index, comprised of the market's most liquid coins, including Bitcoin and Ether. Guys, we are seeing the tier one investors and companies and corporates and Wall Streeters getting involved here. Now, I know there's some hardcore crypto Bitcoin people are gonna be like, man, we hate the banks and so forth. Well, the banks are here. If you want new all-time highs and prices, they're going to get involved. And this is what's needed. The billionaires coming in and they're going to bring their money to the game here. So that's why, once again, we are on the side of smart money and just have a plan, know what price points you're going to cash out on. Of course, be patient and hodl, guys. Check this out from Brian Armstrong at Coinbase. He tweeted the following. We recently received board approval to purchase over $500 million of crypto on our balance sheet to add to our existing holdings. And we'll be investing 10% of all profit going forward in crypto. I expect this percentage to keep growing over time as the crypto economy matures. He says, hopefully over time, we can operate more of a business in crypto. Today, it's still a mix. So they're trying to go full on crypto, but that's pretty amazing, and the amount of money. So notice he didn't just say Bitcoin, he said crypto. So they're gonna put Bitcoin and altcoins. We've seen a variety of companies just go with Bitcoin, right? Tesla, MicroStrategy. So this is really cool. Maybe it'll set a precedence here for companies to go beyond Bitcoin, but nevertheless, the largest United States exchange doing this is very bullish, guys. And obviously Coinbase, you guys may have seen this news, they're launching in Japan with a partnership with financial giant Mitsubishi UFG. So they're expanding around the globe. What have I talked about? Price is important, right? But what's going to lead to higher prices? Adoption. How do a variety of different people get involved in crypto? They need the on and off ramps. And you see these companies setting up shop, the ability to buy, sell, and trade, the ability to custody, and it's happening globally. Coinbase is not moving to Japan for fun, right? They're going there to get business, to set up an on and off ramps, the custody business. Likewise with other exchanges. So I hope you see what's happening here. The investments being made. It costs money to go get licenses, to set up an office, to hire people, to just have the whole infrastructure there. There's a business cost, and these guys are not trying to lose money. They're trying to make money, right? I say these things because I want you guys to think holistically and from a business standpoint, and why these investments, while they may not be reflected in the prices yet, they will eventually lead to higher prices, right? So I'm always paying attention to the mergers, the acquisitions, the expansions, which is a sign of a growing market, right? And that the anticipation of return on investment. So keep that in mind. Oh my gosh, guys, Jay Clayton, the SEC, William Hinman and Jay Clayton, these clowns. Check this out. Former SEC Chair Jay Clayton joins Fireblocks Advisory Board. In his new role, Clayton will aid Fireblocks in navigating regulatory hurdles for developing and deploying digital asset infrastructure, especially around capital markets. Jay Clayton, the former SEC Commission, has accepted the role, right? And Fireblocks is a crypto custody firm. My head hurts when I look at this, because I tweeted about it today, the Jay Clayton story. As SEC chair, he does not approve a Bitcoin ETF. He's been asked about it for years. On his last day, he files a bullshit lawsuit against Ripple over XRP, which hurts investors, obviously. He then joins One River Asset Management and helps them file for a Bitcoin ETF. Then now he's joining crypto platform Fireblocks, and now he's praising crypto. He's making positive comments. Well, I'm not going to go too much into this because you guys know how I feel. The frustration, you can probably sense it in how I'm speaking, but I don't know what's going to happen with him and William Hinman, and the SEC is just blatant in their corruption with some of these guys there. And I said it before, if Gary Gensler and the SEC approves One River's Bitcoin ETF ahead of others, they need to abolish the SEC, because that will be just, unprecedented. And I don't know what the hell Jay Clayton's doing. Something's weird here, man. It's just frustrating. Check this out. XRP lawsuit. Why the SEC is opposing Ripple's motion on an illogical basis. The SEC versus Ripple lawsuit has been seeing an amped up back and forth between the two parties, with the court in the middle. And what is the latest development in the same? The SEC is now opposing Ripple's motion to compel production of discovery materials. As per court filings shared by John Deaton's Crypto Law US, the SEC contended that its internal and interagency documents are protected by the deliberative process privilege, DPP. This was the main argument put forth by the agency. So essentially, they don't want to give up the documents, which the judge ordered them to. This is, they're supposed to protect consumers, and they're trying to hide. And we see the blatant corruption with William Hinman and Jay Clayton. This is just sad, man. And I'm hoping Congress steps in and fixes this issue, because this lawsuit is BS. All right, if you got some HBAR in your portfolio, Hedera Hashgraph, I have some great news here. London School of Economics joins Hedera Hashgraph as council member. Existing members include Google, IBM, and Deutsche Telekom. Bullish. This is what you want to see if you're investing in a project. They are getting real world partnerships and adoption, guys, right? I mean, you got Google, IBM, London School of Economics. Big endorsement here, right, guys? And that is why I decided to add HBAR to my portfolio. And obviously I diversify. So I'm looking to see HBAR do well and make me some money, guys. Check this out. Crypto-friendly CFTC Commissioner Brian Quintenz reportedly plans to step down. And he actually tweeted about it. He said, "I'm honored to have served the derivative markets and public in this role over the last 4 years. My term expired in April 2020. But I wanted to remain at the commission as long as possible to ensure my voice was heard during the transition. My last day will be August 31st, 2020. I'll skip ahead here. He talked about crypto. He said, regarding innovation specifically, I've been privileged to be in this role during the listing of Bitcoin and Ether futures contracts, the proliferation of blockchain custody of crypto inside the clearing infrastructure, and the rapid expansion of DeFi, which purports to realize the ultimate transparency, competition, innovation, reward dynamic of a true free market. I look forward to keeping crypto and DeFi relevant to my career going forward, and will always advocate for freedom, innovation, inclusion, and prosperity they offer." Love it. He's a crypto advocate. He even called out the SEC. You guys remember when Gary Gensler's went on TV and was speaking about he wants to get more power to regulate crypto, and the CFTC like, no. You're not doing that. Even former CFTC Chair Chris Giancarlo called out the SEC on that. So he's certainly a fan of crypto, and let's see where he goes. Maybe he goes to some crypto company, right? But at least he's transparent, not shady like the likes of Jay Clayton and William Hinman. So guys, lots of bullish news. What do you think? With this Wells Fargo news, the BlackRock news, really big. Market's looking good. Let's see how things continue. Like I said, be prepared for upward movement, but also corrections, dips along the way. It doesn't go up in a straight line. Just remember that and have a plan and know what price points you're taking profits at, because there will be a blow off top and there will be a bear market. Keep that in mind. Anyway, guys, leave your thoughts and comments below. Hit the thumbs up button, share this video, and I will talk to you all later.